webcast. So most of my clients have small business in some way. And during all these years of experience, I felt that it is usually not the business that determines success or failure. It is usually the business owner's lack of action and lack of knowledge. So today, I hope I can give you some knowledge and you can take the necessary action to save some money on your taxes. Let's start with our tax tip number 1. Choose the correct entity for your business. One of the most important choices you make as a business owner is to select the best entity for your business. And there are many options available, including sole proprietorship, LLC, partnership, C corporation, S corporation. Sole proprietorship is the most simple entities. Usually there is only one business owner and there is no separate tax return required for that business entity. Basically, you just need to file a Schedule C with your 1040. But there are some disadvantages with the sole proprietorship. One of the disadvantages is that you have to pay the full self-employment taxes of 15.3 on the net profit. LLC is limited liability company. If you are a single member LLC, you can choose to be taxed as a sole proprietorship and then no separate tax return required. But you can also make the election to be taxed as a corporation or partnership. If you have more than 2 members in your entity, you can form a partnership. The same as the sole proprietorship, the partnership has to pay the full self-employment taxes of 15.3 on the net profit of their share. And there is a separate tax return required. It's called Form 1065. S corporation is small corporation. You have to meet certain requirements to become an S corporation. And actually, S corporation is the most popular business entities nowadays for small business owners. Because it can avoid the double taxation as the C corporation, it can also save on the self-employment taxes. C corporations are any corporation that is not an S corporation. Most of the big companies are C corporations, like Microsoft, ExxonMobil, and C corporation is double taxed because the corporate has to pay corporate tax at the corporate level, and the shareholders have to pay their personal income tax on the dividends they received. Today, I'm not going to go detail into these business entities because, as I mentioned before, John Huddleston is going to give a detailed webcast regarding those business entities on November the 10th from 11 to 12. LLCs and S corporation is explained, using them to reduce taxes. So if you're interested, you can just register at the Small Business Webcast to get your spot. Okay, tax tip number 2, business versus hobby. If you have a business loss, usually you can deduct from your other form of income. However, if the IRS consider your business as a hobby, then no deduction will be allowed. There are several ways you can protect your status as a bona fide business. The default criterion is that you have to show the profit in 3 of the last 5 years. Then you are presumed to be engaged in a business. All is not lost if you have not had any profit so far. Here are some ways you still can show that you are a legitimate business. First, you can prepare a business plan with 5 to 10 years of estimate earnings. The overall key is to make sure that your business showing a profit overall. Always referring to a business